Hey, it's Eric Osnes here with Homebridge Financial Home Mortgage with my weekly update on mortgage rates for the week ending April 29th, already through April. Holy cow. Well, bonds just cannot catch a break. Inflation is a culprit again this week, as evidence is growing that we're heading into a wage price spiral. That's when workers demand higher wages and companies have to increase their prices to pay for those wages, and on we go. Inflation numbers for March were at a 40-year record high of 0.9%. Combined with that, the Employment Cost Index, which is a measure of wage, price, and benefit growth, grew 1.4%, way more than expected, 1.1% for the month of March compared to the fourth quarter of last year. That are numbers that the bond market just can't ignore, and we saw interest rates super volatile this week again. Here's the national averages for mortgages. 30-year fixed rates 5.41%, up a little bit from last week. 15-year fixed rates 4.84%. FHA and VA 30-year fixed rates 4.88%. Jumbo 30-year fixed rates 4.56%, and 5/1 adjustable rate loans around 4.38%. You probably, if you've talked with any buyers out there, you can feel their anxiety. It's palpable. There's a lot of concerns with buyers right now. Can I get into contract before rates go higher? Will the seller accept my offer over the 10 others that I'm competing against? What risks am I going to have to take, to make mine the winning offer? I spend a lot of time with my clients discussing, these issues and how to structure the offers, going over what the risks are. And it's important that you really understand, what you're signing with that agreement, because that is a formal contract with the seller, and the seller's under no obligation to change it once you agree to those terms. So be super careful about that. So here's a few things to consider. The first one is the closing date. A fast closing may put you over the top, and make yours the winning offer. We don't know if that's going to motivate the seller or not, but if it is, make sure that you've got a reasonable amount of time to get your loan done. Be sure to talk with your lender, talk with me. Make sure that it works right. We have a rule called TRID, Truth in Lending Real Estate Settlement Procedures Act Integrated Disclosure Rule. And what TRID does is it adds a mandatory waiting period at the end of a transaction. Once you've got your loan fully processed, you sign a document. Once you sign that closing disclosure, we have to wait 3 working days before you can sign the final paperwork. And then closing will typically happen another day or so after that. So with a 30-day closing even, which seems like a long period of time, that gives me as a lender about 13 or 14 working days to completely process your loan. Things have to happen really quickly, and you have to be prepared to jump, when we need you to jump. Financing contingency. Having a financing contingency on your offer protects you against things that could come up with the financing. What if you lose your job? What if your income changes? What if the appraisal comes in low? All of these things, are covered in the financing contingency and can protect your earnest money should something not go perfectly right. Inspection contingency. We see a lot of pre-inspections done on homes when heavy competition right now. It's a great idea, although it can be expensive. You're paying for an inspection even though you don't have the offer accepted on the home. So think about that one, but waiving that inspection contingency can strengthen your offer in the eyes of a seller. And earnest money. Money talks. The more earnest money you put down, the stronger your offer is, but remember that you are putting that money at risk. That's your good faith deposit telling the seller you're serious about buying this home. So we also are seeing people making their earnest money fully released at the offer, meaning that you can't get it back no matter what, so you better close. Super important. And with all these risks, it's really important that you have a fully underwritten loan. That's going to give you that confidence that your financing is in place, also enable us to close your loan much more quickly. Also, with a lot of loan programs, it's possible to lock and shop. We can lock your interest rate for up to a year. That protects you against rises in the rates, which we're certainly seeing right now. And if rates fall before closing, you can float down to a lower rate. And also, it's really critical that you communicate with your lender and with your realtor. Let's all talk together, and your realtor especially should be talking to that listing agent, trying to find out, what are the hot buttons for the seller? What's the factor that's going to motivate that seller to accept your offer over someone else's? Hope this information is helpful. Listen every week. I'm here with an update on the mortgage rates. You can kind of see what's going on, and always happy to help answer those complicated story problems of your own personal finances. You can reach me anytime, 206-915-ERIC, 915-3742, or you can email me, eric@ericismybanker.com, or look for me on social media. Just search Eric is my banker, and you'll be able to track me down. Hope this information is helpful. Have a great week. Talk to you next week.